Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis, and joining me is investment analyst Cristina Parthenido. We'll be discussing the upcoming Canadian jobs data and OPEC Plus meeting and the outlook for the Canadian dollar. So Cristina, on Thursday at 12:30 GMT, Canada will publish its jobs report. And according to forecasts, we're expecting to see a huge rise in the unemployment rate due to the COVID-19 lockdown. Is it possible that these numbers are worse than forecasted? And how are markets likely to react?
Indeed, Maria, Canada is expected to see a record decline of 350,000 in employment in March and a sharp rise in the unemployment rate to 7.2%, which would be the highest since 2015. Certainly after the worst unexpected U.S. jobs report, we can't rule out the case of a more devastating employment report out of Canada, which took emergency measures against the virus earlier than the U.S. did. On top of that, the government also reported a massive increase in jobless claims in the first 2 weeks of March, so there's a high probability that the employment decline could be steeper. Now, in terms of market reaction, if the data indeed disappoint, the decline in the Loonie may not be as bad as the jobs numbers, since markets are already aware that economic conditions, not only Canada but also globally, may deteriorate in the coming months. Probably a recession wouldn't be a surprise, so markets are already pricing a much worse scenario, and a negative surprise in the jobs data this week wouldn't be much informative for a new direction in the Loonie markets.
Okay, so in addition to the Canadian jobs data, we'll also get news out of the oil industry a bit later on Thursday after the OPEC Plus video conference. Could this trigger a much more volatile session for the Loonie than the jobs report?
Definitely the Canadian dollar will not miss that event. Oil is a major component of Canadian exports, so any news out of the energy industry is important for the currency. Besides that, unlike the jobs report, there is more uncertainty about where this virtual meeting would conclude after Saudi Arabia and Russia failed to solve differences during the weekend and instead exchange blames over the slump in oil prices. Russia appeared optimistic that a deal on production cuts is very close. However, since there is no indication when the virus will be contained and when the economies will start to dial back restrictions, questions are still rising about how big the output cut should be to stabilize the oil market. Now, if the meeting concludes to a sufficient decline in oil production, then Russia and probably Saudi Arabia wouldn't like to give up their market share to other oil exporters in the U.S., so they would probably ask the U.S. and other non-OPEC members such as Canada, Norway, and Brazil to participate. And if that's the case, then we may see the Loonie changing direction to the upside. If the production cut is not deep enough to mitigate a potential decline of 25 million barrels per day in oil demand, then due to the COVID-19, with or without other non-OPEC participants, or even worse, concludes nowhere, then the next move in the Loonie will be down.
Cristina, thanks so much. And thanks for joining us at XM.com.